Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's good to be back in the studios after a week-long leave. So just wanted to take this opportunity to wish our viewers a belated Happy New Year. And of course, the markets have been fairly volatile since the start of the year. In fact, the first week of January, we saw mild losses that were clocked by the Lal Street. The Nifty around that 21,700 mark. We'll have to see whether or not the volatility continues this week as well, given the fact that we have the earnings season being kicked off by big tech giants like TCS and Infosys later this week. But of course, over the next 30 minutes, we'll be talking about, the cues for trade, stocks to watch out for. And of course, we'll also be getting in an expert view on what to expect from the likes of TCS and Infosys, in the Q3 earnings season. If you have any stock related queries, of course, send them in to us on our YouTube feed and we'll try and take them up with our technical expert on the show, like we have been doing ever since we started the show. But before we go any further, let's take a look at the top headlines at this hour. Wall Street ended higher on Friday, but stocks snap a 9-week winning streak. Jobs data shows that the US economy added a higher than expected 2.16 lakh jobs in December, causing yields to spike over 4.1%. Asian markets open largely higher in a data-heavy week. Bank of Korea will hold its first central bank meeting on Thursday, and a spate of economic data is also expected from China and Japan. Meanwhile, talking about the GIFT Nifty, it is indicating at a mildly positive start for the Indian market. Crude edges lower after a near 2% surge on Friday that took Brent prices to around $79 a barrel, ahead of Antony Blinken's visit to West Asia as the threat of increased conflict rises in the region. Among stocks in focus today, robust domestic demand fuels a strong performance from Tata Steel in Q3. From the consumer space, Titan's December sales grow 23% compared to last year, but growth lags that of competitors. Also in focus will be Marico and Bajaj Auto, given the fact that the company will be considering share buyback today. And government's advanced estimates project FY24 GDP growth rate at 7.3%. Now, this is well above the RBI estimate of 7%. And in nominal terms, the projected GDP growth for FY24 is 8.9%, a notable deceleration from the 16.1% recorded in the preceding financial year. It's raining investments for Tamil Nadu at the third edition of its Global Investors Meet in China. Firms such as Tata Electronics, JSW Energy and TVS Group commit tens of thousands of crores to the state as it seeks to regain its leadership as an investment destination. Before I get on my fundamental expert, let me also introduce on the show Rajesh Palviya, who's the Senior VP Research Technical and Derivatives at Axis Securities. Great to have you on the show, Rajesh. Belated, in fact, Happy New Year to you, given the fact that I was on leave, didn't really get the opportunity to wish you. How has the year really turned out for you thus far? We've seen a volatile market. Not really, indices haven't really been able to do much over the last 2 weeks, so to say. So going forward, given the fact that we have TCS and Infosys numbers coming out this week, do you expect volatility to continue, and what are the levels you'll be watching out for on the index and Nifty Bank for today?
Good morning, Nandita. Wish you a very happy new year. I hope you enjoyed your holidays and you are back. So overall market structure is bullish, and we believe that this bullishness is likely to continue further as overall broader market is showing good strength. The mid-cap, small cap is participating in this up move, and overall if you analyze the derivative data front also, 21,600, 21,500, which is having major put concentration, that is holding very well in the market. So we believe that once we crosses about 21,750 on Nifty spot, then this rally can extend further, and then we can see a target towards 22,000 and beyond 22,000 level also in the continuation of this uptrend. So I think one should remain on the buying side of market. Buy on dip should be your strategy. So overall structure is looking bullish. Even on the bank Nifty front also, we have seen again on the lower side 47,500, which is the important put based concentration for weekly as well as for the monthly series that are holding very well, and we have seen again pullback action from those level. From bank Nifty, if we able to take out 48,150, 48,200 on the bank Nifty spot, then we may see a good amount of short covering action also, and then which can take up bank Nifty further higher towards 48,600 to 800. So overall, both indices are looking positive. Buy on dip should be your strategy. For Bank Nifty, your stop loss for trading perspective should be at around 47,800 to hold your long position.
All right, those are the levels to watch out for on the Nifty and the Nifty Bank Index. But Rajesh, hold that thought. We'll come back and talk about specific stocks and take up our viewer queries as well. But let me also bring on board, my next guest for today. Joining me is Siddhartha Khemka, who's the head of retail research, broking and distribution at Motilal Oswal Financial Services. Great to have you on the show, Siddhartha. Wish you a very happy new year. Just wanted to understand the market setup from you, given the fact that, we haven't really done much when it comes to this particular, the start of the year. And of course, we've seen US jobs data come in on Friday. Strength there. So, that kind of pushes back the March rate cut expectations. So going forward, do you think, the Wall Street as well as Indian markets are poised for some bit of correction from here?
Yeah, very good morning, Nandita. Wishing you and all the viewers a very happy new year, since this is the first show for the year for me on Money Control. So if you look at the market setup, I think if you after the last 2 months of strong rally of 18%, we started 2024 on a somber note where market is kind of consolidating. The near-term triggers for the market would be the results season, which would be starting off on 11th with key IT stocks, Infosys and TCS announcing the results, followed by HCL Tech, Wipro and HDFC Life on 12th. The jobs data, yes, definitely gives some insights. If you match it with the Fed meeting minutes notes that were released last week as well, I think the street is now expecting the rate cut to start from the mid of next year, which is your June rather than the March. So I think that is something we had been anticipating. Our economist was of the opinion that we should not expect a rate cut earlier than mid of next year. So there would be some kind of, I think, consolidation, but there are much better and other triggers for the markets. As you highlighted, the GDP growth estimates for India is now at 7.3%. RBI expected at 7%. The corporate earnings, which has been strong so far, the Q3 numbers should also be pretty steady because the high base is catching up, but we have seen very strong commentaries, business updates. The pre-quarterly business updates have been pretty strong. So not expecting any sharp decline in the markets, but I think some consolidation and a pause in the market is healthy in the overall run-up or before the next leg of a rally begins.
All right, some consolidation would be healthy here on. But talking about the third quarter earnings season that will be kicked off by the likes of TCS and Infosys, Street is expecting a muted quarter this time around as well, because, this pocket has run up quite a bit in anticipation of rate cuts in the US, right? So from the commentary per se, what would you be watching out for? Because, Street is already penciling in weak quarters, at least the next couple of quarters to be weak for these IT giants, right? Because on ground, when you look at the discretionary demand, it hasn't really picked up. From the third quarter earnings, at least particularly for TCS and Infosys, what are you really watching out for in terms of management commentary?
Yeah, Nandita. So yes, I think the entire street has been signaling about a weak quarter for IT. The stocks did move up because of what happened with the rate cut expectations and the dollar index, which kind of corrected. So we saw that as a positive for the IT stocks that continues to be there. But for the quarter, we believe that weakness would continue on back of the weak macros, the high furloughs, and adverse impact of margins. Some of the companies have announced wage revisions, which would also impact margins. But in terms of the commentary, as you rightly said, yes, on the deal wins pipelines, that is pretty important for the sector. The discretionary spending, specifically for the key sectors, for example, the BFSI, which is the largest contributing sector, any commentary or outlook there, that would be very important and key to watch out for in the current quarter. So apart from that, if you look at, we will see what kind of guidance change that the management does. for some of the companies that do give the guidance. So that is something that again will be a key important. And finally, on the supply side, the wage revisions and the outlook there. That is also key important for the operating margins for the IT company. So these are some of the things that would be the key monitorables.
Right, particularly for Infosys, are you expecting any change in guidance? Because last quarter they had slashed their guidance, right? But do you think the worst is over in terms of revenue growth for the likes of Infi at least?
Yeah, so I think unlikely to change any guidance right now because things have been in line with what has been highlighted. We expect the Infi revenue to remain weak. We are expecting a 1.7% decline on a Q-on-Q basis, on a constant currency basis. Even net profit for Infosys would be down on a Q-on-Q basis marginally by 0.8%. So I think they unlikely to revise, if any, in terms of guidance. It would only remain weak. Things are not looking that pretty strong as of now, but that is where the management commentaries on outlook. When we could see that recovery happening, is it end of Q1 or Q2 of next year? That will be very key for the entire IT services pack.
All right, that was about the IT services pack. But, another sector that's in focus is the jewelry sector, right? The likes of Titan, Kalyan Jewellers, they've come out with their third quarter updates. For Titan, it hasn't been all that bad. 20% kind of, growth in revenue and, 23% kind of growth in the jewelry division for the third quarter on a YY basis. But it's the eye care or eyewear segment that has been a disappointment. And, emerging businesses have also not done all that well. Given the fact that the stock is already at record highs, do you think that the room for disappointment is pretty limited here on? Because of the festive season, the expectations are pretty high for the likes of Titan at least, and it has lagged Kalyan Jewellers when it comes to the third quarter performance. So from the jewelry space, these two stocks, Titan and Kalyan Jewelry, Jewellers, what are your thoughts? And we in fact also have queries coming in on this particular stock, Titan, from Debu K. Wants to understand how should one tread, when it comes to the likes of Titan. What would you suggest?
Yeah, Nandita. I think yes. If you look at Titan, the growth has been steady, although as you rightly highlighted, it has been lower compared to the other companies, especially Kalyan Jewellers. And given the fact that this was the festive season, and we had been hearing about the strong demand, and the marriage season was pretty strong in the December quarter. Having said that, the jewelry division, domestic business for the jewelry division grew only 21% for the quarter, which is not bad, but yes, it is lower than the expectations. Kalyan Jewellers, unfortunately, we don't have coverage right now, but on the broad numbers, the numbers look stronger there. But our view on Titan continues to remain pretty strong. There could be some challenges or issues, especially for this quarter, but we have seen that the market leadership with Titan continues to be strong. This is one company which has consistently delivered growth in terms of sequentially, as well as the visibility for growth for the next few years is pretty strong. Some of the emerging spaces like the eyewear are definitely disappointing with a decline of 3%. Emerging businesses too, short decline. But I think the street is focusing on the jewelry business, where I would say that the room for error is little, given the premium valuation and the leadership that they continue to do. But I think the management commentaries after the quarterly results that could give more insights to the reasons for this slight decline in the lower than expected numbers in the jewelry business. But as I said, yes, positive for Kalyan. We don't have coverage, but we continue to remain positive on Titan. We believe that there should be a gradual recovery in the non-gold, that is the studded ratio, which would help improve margins in future. The overall growth has been pretty healthy, and there are favorable industry trends which is clearly visible by what the other peers are doing. And to top it all, the brand as well as the balance sheet, which is pretty strong. So I think premium valuations would continue as of now, given this pre-quarterly business update. As I said, we have a positive view and a buy rating on Titan, so that we continue to maintain.
All right, buy rating on Titan. Of course, we are getting quite a few queries on these two stocks, Titan and Kalyan Jewellers. Hope that answers your query. But with that, Siddhartha, I'm afraid we are running out of time. I wish to, continue this conversation with you, but time constraints, so to say. So we'll have to leave it at that, and perhaps look at touching base next time. But thanks a lot for taking out time and joining in this morning. Always a pleasure chatting with you.
Thank you. Thanks so much.
Well, with that, let me go back to Rajesh and talk about specific stocks. Rajesh, before I come to some viewer queries, I want to get your thoughts on a Sula Vineyards. Of course, the stock hit a fresh record on Friday. In fact, CLSA has upgraded the stock to buy, and target price has been raised to 863 rupees per share, which implies a 55% upside from current levels. Of course, this comes on the back of positive news flow that the Maharashtra government has reinstated a subsidy on wines produced and sold in the state for 5 more years. Stock has, of course, been in high spirits, but going forward, what are the kind of levels you'll be watching out for the medium term, at least, on this particular stock?
So with high spirit, stock is enjoying all-time high trajectory, and looking at the breakout in last week, that clearly shows that this momentum can extend further. We believe that now if the stocks holds above 525, 530 level, then possibly next target we can see towards 590 to 630. So one can buy and accumulate this stock with stop loss of 525. Positionally, I think this stock can deliver good up move from the here onward. So our strategy is to buy and accumulate this stock as a very strong breakout on the weekly as well as on the daily chart.
All right, strong breakout on the weekly and daily charts for Sula. But let's take up some queries that are trickling in this morning, quite a few. First up, Yagnesh wants to know your thoughts on a Nestle. Of course, after the stock split, how would you view the stock, at least for the long term? He wants to know your thoughts on this.
So as such, nothing to worry in terms of long-term trend. Very strong momentum across all time frame. Stock is enjoying almost its all-time high trajectory, series of higher top, higher bottom formation on weekly as well as on the daily chart. That clearly shows that there is a sustained buying action is there in the stock. It's a good quality stocks to keep in long-term portfolio. If any dips comes towards 2600, 2580 is a buying opportunity again in the decline. Keep your stop loss to hold your long-term position at around 2550, and once we see a breakout about 2700, then possibly this stock can scale up towards 2800 to 2850 also. So hold and buy and accumulate is the strategy for Nestle.
All right, that's the strategy on Nestle. Hope that answers your query. Let's take up the next query coming in from Raja Pasala. Wants to know your thoughts on a Hindustan Copper, and he wants to know whether he can enter the stock at current levels for short term of 1 month, or should he wait for correction before entering. Of course, the stock has done fairly well over the last 6 months. I think the stock is up over 50%. In fact, 140% kind of an up move, doubled in the last 6 months. So would you advise him to wait for a correction?
Nandita, I believe that looking at the chart structure, stock managed to view breakout of a rounding bottom formation on a weekly chart. That breakout clearly indicates that this rally can extend further towards 320, 330 kind of level. So I think his strategy should be to trail his stop loss on higher side. Now he can keep his stop loss towards 270 and hold the position until this stock not breaks below 270. I don't see any kind of weakness in the stock on the near term basis also. Though short to medium term trend is positive, rounding bottom formation is clearly indicating 330 should be the positional target for the stock. So at this moment, 270 should be your stop loss to hold the position.
All right. Hope that answers your query, Raja. But, quite a few queries trickling in on the railway space. Lokmanya Rampila wants to know your thoughts on IRCTC and IRFC. In fact, Anant Upadhyay also wants to know your thoughts on IRCTC. Now, rail stocks, of course, have been doing fairly well. Would you advise investors to wait for any kind of dip, or do you think it's time to ride the momentum?
So, we have seen very strong run up in most of the railway stocks now. Since last couple of weeks, some of the stocks are still consolidating at higher band of the rally. IRCTC is one of the stock where we have seen, there was underperformance, but now stock is picking up, and now, converging all the gaps, or, it's, moving further higher to match out the peers companies. So looking at the breakout on the IRCTC, we believe that now if stocks holds above 870 level, then possibly this stock can also scale up to the level of 940, 960 in the short to medium term perspective. So I think IRCTC one can hold for further another 4 to 5% kind of up move in the this current uptrend. IRFC again, stock is consolidating since last 2 3 week in very narrow price range. Once stock manages to cross over 105, 106 kind of level, then possibly we can see an extension of this up move towards 120 to 130. Overall structure for IRFC is also bullish. Your stop loss at this moment should be at around 90 rupees to hold the long position.
That's the view on railway stocks. Plenty of stocks to discuss, but of course, always short on time, Rajesh. Lots of queries coming in on the defense pack as well. Funny, who's a regular viewer, has written in, wants to know your thoughts on Bharat Electronics and Bharat Dynamics. And of course, we had HAL, rallying quite a bit on Friday. In fact, market cap has crossed that 2 lakh crore mark there. So among the three, HAL, BEL and BDL, would you recommend fresh buy on any of them?
I think very strong theme playing out in all defense stocks, be it BL, BDL, HL, all stocks are showing good traction, and most of the stocks are showing very sustained kind of buying action. I think BDL, yes, there is a fresh breakout on the monthly as well as on the weekly chart. We believe that now if stocks holds above 1680 level, then possibly this stock can scale up to the level of 1800 to 1850 in the continuation of this up move. BL is also looking promising after a brief consolidation of 4 5 trading session. Now stock has shown good traction in the last week also. We believe that once stock crosses above 188, 189, then possibly this rally can extend towards 200 kind of level also. So BL is also buy with stop loss of 173.
All right, that's the view on the defense pack. Of course, good story there. And of course, the stocks have been a high flyer as well. But let's take up a query on Tata Motors. Couple of queries coming in on this particular stock from Naveen as well as Charan. Since the start of the year, last 5 trading sessions, Tata Motors hasn't really done much. But the stock has seen good momentum. Would you recommend buying?
So this is one of the stock which we have seen a very dream run in last year, and this is the Nifty 50 stock which has delivered very good amount of returns to all the investor. I think looking at the overall long-term structure, we believe that this momentum can extend further as overall structure is bullish. Nothing on the profit-taking side. Even since last 4 5 trading session, though in volatile market, stock is consolidating at higher band of this rally. So we believe that till the stocks is holding above 755 level, I think nothing to worry in terms of trend of stock. It's very much on the long side only. So 755 should be your positional stop loss to hold the position. We believe that this stock can deliver good return in coming months. Also, we are projecting target of 840, 850. In the short term, but long term target is 900 for the stock. So 755 should be your stop loss to hold the long position for positional basis.
All right, that's the view on Tata Motors. Now, very quickly, want to take up a few queries from the pharma space. Of course, our regular viewer Satya CK wants to know your thoughts on Biocon, and we have Siddharth Jain writing in on Glenmark on whether or not one should buy that particular counter or not. I think, if you look at Glenmark, it has literally doubled over the last 1 year. Biocon has had a good run since the start of the year. So on these two stocks, what are your thoughts?
Both stocks are looking promising. Biocon I have shortlisted for my a morning pick for you also. So Biocon, yes, we have a bullish view. We expect a target of 305 to 310. Very strong breakout in last week with the volume action. Looking at the breakout, now if stocks holds about 285, then possibly this rally can extend towards 305, 310 and 20 kind of level. So buy this stock with stop loss of 285. Glenmark is also showing good traction, and looking at the weekly, monthly chart, we believe that now if stock holds above 870 level, then possibly this stock can also exhibit good rally towards 940, 950 kind of level. So overall structure for Glenmark is also on the bullish side. 870 should be your stop loss to hold your long position.
All right, that's the view on pharma stocks. And very quickly, before I come to your picks, how would you play a Bajaj Auto today? given the fact that the board will be meeting to discuss the share buyback. And this time around, of course, management has already indicated that it could be a bigger buyback. So how would you play this particular stock?
So definitely stock is in bullish trend only. Again, the price behavior will depend on the what kind of buyback price they will announce in board meeting, as well as what is the quantum of the buyback. So I think one should remain invested as overall structure is bullish. Now your stop loss to hold your long position is 68.80. We believe that if anything comes surprisingly positive, more positive beyond expectation. So I think this stock can scale up further higher towards 7,300, 7,400 also. So again, everything depends on the what kind of buyback they announce in the board meeting.
All right, all eyes will be on the buyback announcement, of course, the share price, the route that they choose for the buyback, etc. So that stock will be in focus. But of course, before I let you go, Rajesh, what are you flagging off for viewers in terms of stock recommendations?
So I think first stock that we have already discussed, Biocon is my first pick. The 305, 310 is the target. Keep your stop loss is 285. Second stock is Poonawalla FinCorp, very strong breakout on the daily chart. Stock managed to view breakout of contracting triangle formation on the daily chart. Looking at the breakout on stock, we believe that this stock can exhibit good amount of rally in near term. We are projecting target of towards 490, 500. Keep your stop loss of 445. And the third stock is from the real estate space. Bajaj property is looking very promising, very strong breakout in last week. Looking at the breakout and the kind of momentum which we are witnessing in all real estate space, that Godrej property can exhibit good amount of rally towards 2,300 to 2,330. So one can buy this stock with stop loss of 2,190.
All right, those are the recommendations coming in from Rajesh this morning. With that, Rajesh, thanks a lot for taking out time and joining in. Always a pleasure chatting with you, and look forward to touching base again next Monday. Well, with that, we've come to the end of this edition of Morning Trade. Of course, it's a thank you for watching from me and the entire team. But stay tuned, because coming up next is Opening Bell.